Greetings, Professor McKee here with another quick Excel tip your finance professor wishes you knew. In this video, we will learn how to use the IRR function in Excel to find the internal rate of return for a capital budgeting question. In any intro finance class, you will have a unit on capital budgeting, and we professors will always have questions where we give you a schedule of cash flows for an investment project and ask you to use a decision rule like internal rate of return to determine if the project should be started or not. If you want to ace those questions, this video is for you. So I prepared a standard question, the same one as other capital budgeting questions in this series. And to get started for any capital budgeting question, it's best to convert this verbal description into our actual timeline. So we have an initial expense at year 0. That's usually how it's going to work. And it's going to cost us negative 400,000. Then in years 1, 2, 3, 4, and 5, we have 100,000, 120,000, 125,000. There we go. 130,000 and 135,000. Those are our positive cash flows, and year 0 is our negative cash flow. And our discount rate for the WACC is the 12%. Now go to our cell next to IRR, B10, and type equals IRR, open parentheses, and we just need to enter only one parameter, values. That's just the array for our entire timeline, so B6 through G6. We don't need to put in a guess. We hit enter, and we get our 15%. Now be careful here, IRR starts with year 0. So make sure you include every single year. You need to include them all. And that's it, that's our answer. 15% is the internal rate of return. Now sometimes our finance question will only ask, what's the internal rate of return? And we're done. In which case, we would now be done. However, we might also be asked to interpret what this 15% means. So when we use IRR, we take the IRR number and we compare it to the project's WACC. If IRR is larger than the WACC, 15% versus 12%, then this would be a good project for us. Since it is, we would tell the company here, yes, you should build the warehouse. It's going to create value for the company. If the IRR had been less than 12%, then the project would subtract value from my company and I shouldn't build a warehouse. Since we used cell references here to calculate IRR, I could apply the spreadsheet to any other schedule of cash flows. I just need to change numbers here, add additional years, and adjust my array. And I could use this to solve any question as long as I'm just being asked for IRR. So with this single function, you can now find the internal rate of return for any question your professor might throw at you. If you found this video helpful, please comment, like, and/or subscribe so that other students can find this too. Happy studying.